begun already in some sectors of the economy, and globally emerging markets peaked out. Some actually peaked out in 2007 and some in 2015. But by and large, emerging markets compared to the rest of the world have grossly underperformed in the last 12, 15 years. And there was massive wealth destruction in real estate in Europe and in China in particular, and in America. Talking about wealth destruction, I never believed that office towers that sold for, say, $500 million 5 years ago could now sell for, say, 30% of the original value. I mean, this is incredible, the drop
or less
in commercial real estate. And I think it will spread to other sectors of the economy. You know, if you print money, the system then suffers from the so-called illusion of wealth, which has been described. It's also a very good book. He's not quoted frequently because he became controversial, Irving Fisher, but he was a very great academic, and he wrote Booms and Depression, and also about the crash in 1929. He wrote about the debt deflation theory, and in it he describes this money illusion that is being created when you print money. Then everybody feels richer and spends more money, but it's all in nominal terms and not in real terms. So if you ask 70% of the population in the US, they will tell you that the standards of living aren't what they were 10, 20 years ago. Number two, the Fed publishes statistics. How much money do people earn who are 35 years old, okay? When they're 35. And how much money did their parents own and earn when they were 35 years ago, say 30, 40, 50 years ago? The result is that the young people at 35 have no way to buy a house. You should spell it out and tell who is responsible for this situation. The money printer at the Fed who boosted asset prices. They thought, oh, asset prices go up. It's wonderful for the economy. They overlooked the young people and the people that didn't have a home. They cannot buy a house. They're precise. Goldman Sachs published a chart on the subject of affordability. It is at the lowest point ever in the US. And then the economists who are paid by the Fed and all are in bed with the government, they tell you everything is fine. It's a complete joke. Our profession, as the profession of academics in laboratories in the drug industry, has all been corrupted. Corrupted, yes. Has to be spelled out once. Traditional or mainstream economists, they talk about inflation. By inflation, they mean an increase in consumer prices and services. But they don't mean that when there is a bull market in housing that this is inflation. But it's the same. It arises because of fiscal deficits that are then financed with money printing. And when this happens, the housing keeps on going up rapidly, because when an asset price goes up by, say, 10% per annum, even interest rates at 6% is very low, because you could borrow money at 6% and buy the asset that goes up by 10%. You make a fortune in a few years if you're leveraged. So I'm mentioning this because there are limitations, and you alluded to it when you said Fed controls the bond market to some extent. Correct. They don't control it entirely, or they can control it for a while until it breaks. Now, the asset bubble that has developed in housing is such that even if mortgage rates drop, I don't think the demand will go up a lot. And we will have to see how prices behave, because in the commercial space, prices went down. So even an interest at 2% per annum would be very high if the asset price depreciates 5% per annum or 10% per annum. And in the housing industry, I think that interest rates were in a secular downtrend. 1981, peak in 10 years treasury notes and money market rates. The bottom in May, August 2020. Since then, interest rate cycles like war cycles and the Kondratiev cycle are long-term cycles, inflation cycles. And from here, from 2020, in my view, we are in an up cycle for inflation and interest rates that will last maybe 20, 30 years. Now, it is an irregular cycle. I've written a lot about the interest rates movement in the 70s. Already in 1970, we went to 6% on the 10 years. And then in 73, 74, we were already at over 12%. Then we dropped to 6%, but then we went up to 15% and more. So every cycle has sub-cycles. We have a rising wave, then a correction, then a rising wave again, and so forth. And this, we are now in a situation in interest rates, and I've written recently that people should buy bonds, because I think the economy went into recession already 6 months ago. But the government and the economists don't want the ordinary people to know about it. But in my view, the economy will be very weak for a while, and then they print again money, and then be another, rise in nominal terms. But each time they do that, they just postpone the ultimate crisis, and the wealth destruction is well underway. I'm also happier that if my portfolio increases in value than if it goes down. However, I want to point out one factor. Let's assume we are all investors, and the markets and the asset prices go up by 20%, and at the end of the year, our wealth is up by 10%. We are happy that it's up by 10%, but in reality, we are by 10% poorer compared to the rest of the world, because their assets went up by 20%, ours only by 10%. Now, assuming we own assets that in an asset declining phase go down by 10%, and everybody else drops by 30% or 50%, or like the Nasdaq after year 2000 drops by 70%, then if we're down 10% or 20%, we're much, much richer relative to the rest of the world. So my advice is to people is to diversify and to avoid being down heavily in the coming asset crash, which inevitably is going to happen. It could happen in real terms and not in nominal terms. Say, we have a portfolio of stocks is worth $100 million, and the gold price is at 1,000, and suddenly the portfolio is worth $200 million, but the gold price is worth, say, 10,000. So relative to gold, we would have lost out. That's why I recommended you this book, The Economics of Inflation, because that is described how in Germany, during the hyperinflation 1918 to 1922, stocks, they kept on going up in nominal terms. But because the exchange rate collapsed, the Rentenmark collapsed against the US dollar, in real terms, stocks went down. In America, and there are many studies that have been written about the subject, but it's not being brought up sufficiently by mainstream economists, and these are the unfunded liabilities of the government and also of the private sector, because many pension funds are underfunded dramatically. When you add up the unfunded liabilities, which are a multiple of the government debt that exists already, it doesn't add up. What can the government then do in a situation like this, where there's not enough money in the kitty? They could increase taxation. Please show me any government in the world that gets elected when it goes to the voters and tells them, look, we live above our standards of living, we need to increase taxation. None of these government candidates would get elected. None. The liars get elected to say, oh, we can fix everything. But this is a major issue. I recommend actually, and many Americans do, study Roman history, because what is happening today in the Western world is very similar to what happened in Rome. They overstretched and they had to pay more than came into the kitty. So what they did is the silver and gold coins, they added lead to it and copper. And so the value of these coins depreciate. Anyway, the same as now. And this has been also described by Herbert Hoover. One way to avoid paying more tax or raising more tax, which is the easiest, is essentially to print money. And then there's inflation. And that I want to stress, inflation is a tax, nothing else but a tax. If in a country all the expenditures are met by the taxation of the people, usually there's very little inflationary pressures. But when the deficit is as high as it is in the US, there are months when the government receipts through tax revenues is less than half of what it spends. The Biden administration is the world champion in throwing money out of the window, distributing money. Then they say the economy is strong. Nonsense. In America, an economist that used to be very famous, but nowadays the interventionists don't want to quote him much and don't want to talk about him much. But you should read, all of you, Capitalism and Freedom, because capitalism is under assault. And I understand why, because it's easy to attack rich people, Jeff Bezos and Bill Gates, and then. Now, the thing is this, in my view, there are some problems with capitalism. And one is, it's better at making money than at distributing money fairly, one might say. But you have to envision that if rich people become very rich and everybody else goes up as well, it's not so bad. I mean, if I look at China, I can say over the last 50 years in China, everybody has increased his standard of living meaningfully. Big changes are happening. And I think the socialists and the Greens in government, they attack capitalism because of the rich people and so forth and so on. But they love the rich people because the rich people bribe them. But this book is very good. And then you go on YouTube and you give in Milton Friedman. He has many speeches. These speeches are for students and people who are not the academia. You can understand what he says. And this is very important, that people come back and that they tell their children, yes, we have many problems, but it's more because of the interventionists into the free market and into the capitalistic system that we have these problems, and not because of capitalism itself.